Come, let us prepare, make some good profits today. Our market left us big clues here. I want to talk about this. This is very important. There's maybe a hidden liquidity right here. There's very important clues here as well, and that's where the blue rhythm is. So let's talk about that in today's video. But before that intraday analysis on Friday, you have to understand this particular analysis because I explained that in previous video. I'll explain it a little bit more because many of you do not fully understand that. But let's talk about that. 1023 here. You see 1023 was when we were chopping right here. This was 1023, right? All you had to do then was to wait for the cups to close, isn't it? You see the cups close, it becomes really easy because thereafter, all you had to do, wait for the pink algorithm to start building liquidity. And do you see that? Right there. I will zoom it in later so you can see it a little bit more clearly. But absolutely beautiful trade, especially off the pink support bounce right there. Now, there's a reason why I double channeled this pink. It's very important. You have to understand. I'll explain that later, but you see how the orange is buying up. So you understand that there was this orange buyer that was participating in the day, and thereafter you had a news candle there, right? So yes, news candles matters, but you do not chase it. You still trade as structured demands. There's still liquidity here that's to be made here. Now, I will explain this here so this becomes more obvious. Now, I want you to take a look here. Let me zoom it in for you. Understanding this dual algorithm setup is very important because you noticed firstly that there was this magenta, I'm sorry, I meant the pink, that was starting to build the liquidity there. Right, so this engulfing candle was extremely important here as well, and you see how it builds that liquidity on the breakout right here. Look, penny perfect bounce off that pink as a support, which was previously resistance. Now this is just simply called a breakout and retrace, so quite straightforward here. And this you see, absolutely beautiful, the engulfing providing you with the liquidity for the head of the inverse head and shoulder pattern right there. Absolutely beautiful. So it was also at this point in time at 11:08 here. I told you to wait for a breakout and retrace. So don't be taking calls at resistances, right? And when you are able to identify the algorithms and see how penny perfect they are, you are able to see what's resistance and what's not. So you wait for the breakout, form that beautiful support right before it starts a big move right there. They're absolutely beautiful. So understanding this is very important. Now, why going long? Because, well, firstly, we were above the 5-day. And we talked about this in the 30-minute chart as well. Now, importantly, you understand we were above the 5-day moving average, right? And I told you we could be reclaiming that. And this was a very important clue that I talked about in yesterday's video. So please watch that later. This is pretty important. The links is in the description below from yesterday's video. Please watch that and the video prior so it creates context for you. You trade with me daily. You can understand the market context daily. You chain up my thoughts daily so you can be more careful in creating your trade setups. You're more aware what's expected, and more importantly, you're learning to develop a trading brain, which is quite important if you want to be learning to trade this, because you have to learn and understand SPY or the stock market as an entirety, right? You're learning to study something that's over a century old. Well, a stock market at least. SPY is not that old, but you get the point. So you have to understand the behavior, the context of how the stock market works. If you don't even understand demand and supply, you don't understand buying and selling, you don't understand price action. Now this becomes very difficult for you to navigate around. So watch my videos. That's the best way to learn. You don't have to learn too much technicalities for a start, but you can do that. This is a very important part of learning, and that is just to devote the time to study and review. So I talked about this part, right? If you remember, I mentioned that we did not fully close the gap, even though we had very aggressive selling. Now you have to understand the context behind this. If you were a seller, if you are intending to bring this below this range, you are a seller, you will minimally want to soak up all the orders here. At least close the gap. Because when you close the gap before the bounce, you're basically telling me that you are soaking up all the buyers before the bounce if you want to head further down, right? So you've done the heavy work of removing the obstacles ahead of your way, right? So that's the behavior of a seller, especially with very strong selling. There was a negative catalyst and there was strong selling. So if you were a seller, that's what you want to do. It's well, not in the way common sense, but it is expected behavior. And I mentioned they didn't do that. Absolutely didn't. So I told you something is up. If they didn't do that, right, it tells me that these are not sellers. These are not sellers. These are buyers who wanted to allow the sellers to dip to a certain level before it starts to push up. And you see exactly as it happened on Friday. There you go. So watch yesterday's video again. You have to have a better understanding about orders that are in the market. Right, this is not the first time I'm talking about this, which was why there's some members who managed to understand that almost immediately. And that's the thing. If you trade along with me long enough, you will understand my language. Now, stock market trading is a language as well. Even communication between your loved ones and your family, it is also a very specialized language that is beyond the generic language that we learn in school or in society. So, like what I always tell Discord members, we are a team now, right? So we're teammates. The way we communicate, especially in brevity, in the intense nature of the stock market, intense as in it's literally moving in seconds or even microseconds. So we have to communicate sometimes beyond proper full sentences. And so when I say certain things, you're able to have a very good understanding of what I'm trying to convey to you. And that requires some form of consistency, right? The way I talk to you has to be consistent, and the way I present my information to you has to be consistent. And that is why you watch the videos daily. And I thank you for that. And that's why we trade daily together. So please do that. And I appreciate you. We're a team. Always remember that. We're working towards the same goals. Right? Some of you watch my videos thinking, you're finding enemies. I don't understand why. Right? You're a hater somewhere. You hate everyone. Right? But the truth is you hate yourself. And that's the reason why. So I invite you to just spend some time away from the stock market in that case, right? Because it's not a trading problem. Don't use trading. And that's the same way how people use gambling, people use alcohol, people use vices to solve problems inherent in them. So likewise to you, my advice to you, do not use trading to solve a problem that you probably can't resolve with trading. Money can't solve your problem. Trading can't solve your problem. Not yet. So as always, trading will make you a better person. So you have to be more mindful of that. So Friday, quite important. Understand that. And because of that, when you identify the pink algorithm, everything becomes very easy from there. So let's see, where do we go from here? Now, remember I talked about this blue algorithm. You see it building support here right now. The reason it's not squeezing tells me something, and that is this will be liquidity. Right, so don't worry. Let's see how we can build a structure from here. It's unlikely we head up. If we do, just use the orange. Right, as I mentioned, we are still in that orange. It's a large range, yes, but you can find microstructures in the chart. But not squeezing on Friday just tells me everything I need to know, because most likely we will probably need to form another structure right here. So pay close attention. If the market retraces back, right, we will probably have to retest 5-day again, which is trending up quite aggressively before we start pushing up here. Right, we're starting to taper now. You see the blue already starting to take shape. So just be a little bit more mindful. There is some tapering in the range. You see blue already starting to build liquidity. We've retested the blue liquidity as well. Even at this 2 wicks here, you see the blue liquidity that is still building here. So we will talk a little bit about that. But this tells me that if we do have some form of stronger upsides here, you see the blue, you can be very careful because this is very clear liquidity. So just pay close attention on Monday. Wherever we open, look out for this particular liquidity here. Now, there is also liquidity here, where the blue algorithm is, and you have to just wait for cups to close here. 5-day will turn into some sort of resistance if this wants to head down. So this is the first step here, if this wants to head down. And the second liquidity here will be where this particular blue liquidity is, right here. By then you see the 5-day already starting to trend down. Now, will we head down? I can tell you there will be a pullback. I will explain that a little bit more later. But in the event we start to continue trending up, remember the orange right now, it's still in control until we break the ranges. Firstly, from this blue, right? And secondly, you will see more resistances as the 5-day starts to trend down if this truly wants to head down and grab the liquidity here, right? So at the meantime, right, watch out for the buying continuation structures here, right? Because this can slowly grind up still, and blue can still be in control because you already see the blue building liquidity there. So it will be no surprise if it wants to trend up, then grab the liquidity there later. Because remember, if you're a bear, you want to sell at a higher price. It makes sense. If you're a seller of something, you want to sell it higher instead of selling at a lower price. So if you can allow that to happen, knowing liquidity is here that's easily grabbed, you will do it. But obviously, not squeezing on Friday tells me that this will probably pull back a little once we open at 6 p.m. later, the futures market. So pay close attention to this. Yeah, so let's see where this goes, because you understand the liquidity ranges. It's quite straightforward that. Let's take a look at the daily chart. Now, this is also very important because remember I told you a few things. You can watch the previous videos. It will all make sense to you. Now, the first thing I told you then was that if 5-day was trending up, upper Bollinger trending up, you will see this happen. Now, you see it happen now. Right? And when we were trending up, not retesting 5-day, I told you, don't worry, we will eventually retest 5-day. And there you go. We've retested 5-day at least 2 to 3 times in the week. So that was great. Now, the next thing I told you is that if we want to have some sort of stronger pullback, you wait for bottom Bollinger to start trending up. And I was hoping that we at least trend up above this level here. So once we get a little bit higher to this level, there may be a pullback that's coming. Another thing I told you is that we have to retest the 20-day moving average. Eventually, we have to. Okay, you understand that eventually. But 20-day has to first start trending up. Now, I would think that we would trend up to this particular level where there is a lot of liquidity here, where the previous upper Bollinger was plateauing. Now, if we get to there, I would think it will be more likely that we had a pullback to the 20-day moving average. Now, I want you to see on every time we had a trend up. I want you to see every time we trend up, 5 days tested, and once in a while, right? And I used a very rough estimation of once a month that it will retest the 20-day moving average, right? You see it here. You see it here. Once in a while, we too have to grab liquidity from the bottom Bollinger. 20-day retest, 20-day retest, right? This is also bottom Bollinger retest. So I want you to see the understanding of that, right? So wait for, I would think, the 20-day closer to where the upper Bollinger is, right? By then, I would think the 5-day will also trend a little bit closer to that before we start building more liquidity for a bigger move. Right, and by then you will see the bottom Bollinger starting to trend up. And remember, as I told you, a pullback only happens when the bottom Bollinger starts trending up a little bit more. Right, so understanding this becomes very key for you. And when you translate it in a 30-minute chart, it will make more sense. Right, so there are lots of key liquidity here. Pay close attention to that, and don't forget to watch yesterday's video and the video prior to that, so you can latch on my thought process, have a deeper understanding of what to be expecting from there. Lots of things to learn, so let's learn together, right? And the best way to learn is not through a course, but it's to trade with somebody who knows what they're doing, right? So thank you very much for watching. See you closer to opening bell.